Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings and in this report from Capstone Green Energy Holdings. Incorporated, it looks like we have a fascinating tale of survival and strategy with some very interesting financial numbers that might make you scratch your head. Before we dive deep into this report, if you love getting these no-fluff insights from the financial world, make sure you hit that subscribe button and ring the bell. We also have a thriving Discord community linked in the description below where we break down these reports together, so come join the conversation. Alright, let's get into it. This filling is for Capstone Green Energy Holdings Incorporated, and it is their quarterly report for the period ending the 31st of December 2025, giving us a look at their financial health and operational ups and downs. They are in the business of providing microgrid solutions and energy systems, aiming to balance energy needs with sustainability and affordability. Looking at their balance sheet as of the 31st of December 2025 compared to the 31st of March 2025, we see some key shifts. Their cash position has significantly improved, starting at about $8.7 million and jumping to over $14 million. That is a good sign for immediate liquidity. However, their inventories have also grown from $16.6 million to over $18 million, which could mean they have more product ready to sell or are holding on to more raw materials. On the flip side, their current liabilities have also increased quite a bit, jumping from around $52.5 million to over $73 million, and this is largely driven by a significant jump in their exit notes. This signals a growing short-term debt burden. Now let's look at how they are generating cash. For the 9 months ending the 31st of December 2025, they actually generated $2 million from operating activities. This is a big improvement from the same period in 2024 when they used $2.2 million. This positive swing is mainly thanks to better revenue and improved gross profits after a period of losses. Their revenue for the 9 months ended the 31st of December 2025 significantly increased to $83 million, up from $58.5 million in the prior year. This is a solid 42% jump, showing strong demand for their products and services. A big part of this growth is coming from North America, especially the United States and Canada. And this revenue growth is directly translating into better profitability. Their gross profit for the 9 months ended the 31st of December 2025 was $27 million, a substantial increase from $15.8 million in the same period of 2024. This means they are making more money on each sale and managing their costs better. Specifically, their product and accessories revenue, which is a core part of their business, saw a roughly 82% increase for the first 9 months of 2025. This is driven by a significant increase in shipments, particularly of their C1000 turbines. Their parts and services revenue also increased, showing a healthy 8% rise. This segment, known as their Energy as a Service offering, is crucial for building long-term customer relationships and generating predictable income. The rental segment also saw a nice 20% jump, indicating that their equipment rental services are in demand. It is worth noting that a good chunk of their sales come from distributors, with DTC Solutions alone making up 27% of revenue in the last quarter. This highlights the importance of their distributor network, but also points to a concentration risk if any one of these partners falters. Now, for the bottom line, for the 9 months ended the 31st of December 2025, they reported a net income of $1.3 million. This is a huge turnaround from a net loss of $7 million in the same period of 2024. This shift from loss to profit is a critical indicator of their improving financial health. However, despite this progress, their total stockholders' deficit remains significantly negative at over $63 million. This indicates that the company's liabilities still outweigh its equity by a substantial amount. Now let's talk about a major looming challenge. They have a significant amount of debt, and the exit roll-up notes totaling over $25 million are set to mature in December 2026. They explicitly state they do not expect to have enough internally generated cash to repay this debt and are looking at options like issuing more stock or taking on new loans. This raises serious questions about their ability to meet these obligations. This debt maturity, combined with their current cash position and working capital deficit, has led management to state there exists substantial doubt about the company's ability to continue as a going concern. This phrase is a big red flag for investors and signals a very uncertain future if they cannot secure new financing or renegotiate their debt. On the legal front, there are a few interesting points. A securities class action lawsuit brought against past and present directors and officers has been settled in December 2025. While the company itself was not a named party, this settlement suggests they have put some past legal troubles behind them. They were also involved in an arbitration with a distributor Cal microturbine, which was initially quite contentious with claims totaling millions of dollars. However, it seems like both sides agreed to dismiss the case in August 2025 indicating a resolution. Speaking of Cal Microturbine, they completed the acquisition of this company on the 13th of August 2025. This acquisition for nearly $15 million is intended to expand their distribution and service capabilities and appears to be integrated into their operations, contributing positively to revenue in the period following the acquisition. Looking at the overall picture, Capstone Green Energy has made significant strides in improving revenue and profitability in the reported period. The increase in sales and the turnaround from a net loss to a net income are very encouraging signs. The acquisition of Cal Microturbine also seems to be a strategic move that is quickly contributing to the top line. However, the elephant in the room is their debt burden, especially the upcoming maturity of the exit roll-up notes. The explicit statement about substantial doubt regarding their ability to continue as a going concern cannot be ignored. This means that while things are improving operationally, the company faces a very high hurdle to survive long-term without successful refinancing or further capital infusion. Their focus on the AI data center market is an interesting and potentially high growth area, but it is still in the early stages and comes with its own set of risks. So what is my take? Well, on one hand, the operational improvements are undeniable. They are selling more products and services and improving their margins. On the other hand, the financial risks are significant and immediate. The going concern doubt and the debt maturity are critical factors. It is a classic story of a company trying to turn itself around, but facing immense financial pressure. Their ability to navigate the debt situation in the next year will be the ultimate test of their survival and future growth. Alright, that is our deep dive into Capstone Green Energy Holdings Incorporated's latest filing. What are your thoughts on their financial turnaround and the significant risks they face? Let me know in the comments below. If you found this analysis valuable, please give this video a like and subscribe for more corporate deep dives. And hey, don't forget to join our Discord community linked in the description for more real-time discussions. Thanks for watching, and we'll see you in the next one.